This is the Martini Mortgage Podcast with Kevin Martini.
Hello, this is mortgage strategist Kevin Martini with the Martini Mortgage Group at Benchmark Mortgage. And this is episode 6 of the Martini Mortgage Podcast. It's called 5 Financial Reasons to Buy a Home in Raleigh or anywhere in North Carolina or any city for that matter. Now, let me share something. I was in the grocery store buying my Frosted Flakes, and at the Harris Teeter, someone said, "Excuse me, Mr. Martini?" I immediately got so excited because I thought my dad was in the cereal aisle at the Harris Teeter in Cameron Village with me, but then I realized it was a young man that was talking to me. The young man's name was Steven, and he's a younger millennial, and he asked me if he should buy a home now or maybe he should wait. My response was, it depends. You see, no one on YouTube and no one on a mortgage podcast or a real estate podcast or any podcast for that matter, and most definitely no mortgage app that can take you to the moon on a rocket can tell you if it's good or if it's a smart idea for you to buy a home. Every family I have the privilege to work with is different. There is not a cookie cutter response to Steven's question that he gave me in the Harris Teeter. Think about this for a moment. Getting a mortgage is a big deal. It's a financial instrument just like a stock or a bond that you would buy for your portfolio. Now, you would never buy a stock without making sure it properly fit into your portfolio. Would you? If you would, you shouldn't. Does that make sense? This is something I can help determine when we first connect together. Now, if buying a home is right for you and it's right for your family, then I want to share some of the financial benefits associated with buying a home and getting a mortgage with the Martini Mortgage Group at Benchmark Mortgage. Let's start mixing this cocktail. Martini factor number 1 of 5 financial reasons to buy a home. Housing is one of the only leveraged investments still available today. Simply put, leverage is the use of borrowed money to increase your return. To illustrate, let us assume that you want to buy a home in Raleigh and the home price is, say, $500,000, and you have 20% saved. So let's look at this transaction in detail. You would buy that home for $500,000 and you would put 20% down. So we can help out with the math. That's $100,000. And you would get an epic mortgage rate on your $400,000 mortgage with the Martini Mortgage Group at Benchmark Mortgage. Now, let us fast forward, say, 12 months or 1 year. In other words, you got the home and you got the mortgage and you moved in and you have lived in it for a year, also known as 12 months. For the purpose of conversation, let's assume the home appreciation is 5%. This $500,000 home you purchased just 12 months ago is not worth $500,000 anymore. It is worth $525,000 because there was a 5% appreciation. Assuming this is your only asset, your net worth is now $525,000. Does that make sense? So $500,000 times 5% is 25. 25,000 is the appreciation plus that 500, hence 525. Now, let's think about this. Let's say you did not buy that $500,000 home in Raleigh, and let us assume that you purchased a $100,000 home for cash in Raleigh 12 months ago. Using that 5% depreciation in the previous example, then your net worth would be $105,000, right? Because it's a $100,000 house. There's a 5% depreciation. That's $5,000. So add those things together, $105,000. With leverage, you made $20,000 more. Let me share a quote from the Joint Center of Housing Studies at Harvard University on this topic, and I quote, "Homeownership allows households to amplify any appreciation of the value of their home by a leverage factor," end quote. Martini factor number 2 of 5 financial reasons to buy a home. Now, this one is crazy simple, and it's so very obvious, but so many people miss it. You are paying for housing whether you own or rent. Think about it. Here is a fact. When you rent, you are paying for a mortgage. You are just paying your landlord's mortgage for them. Right now, this moment, many loans are approved at the Martini Mortgage Group at Benchmark Mortgage with a low down payment, and even with someone that has a bump or a bruise on their credit. In addition, it does not matter if you're working with me, Alex, Logan, or Brad. We all offer, as your mortgage strategist, a no down payment option with the Rural Development Home Loan, also known as the USDA Home Loan. I have firsthand confirmation bad things happen to good people. And that is why I proudly offer a special FHA home loan program to families that have had a hiccup. I have personally helped families when their credit score was as low as 580. The Martini Mortgage Group also offers community lending programs via Fannie Mae and Freddie Mac. Home Ready and Home Possible are 2 very amazing programs with a low down payment requirement. Please, number 3 of 5 financial reasons to buy a home. Owning a home is usually a form of forced savings. Every month when you write that check for your mortgage, you're not only paying the interest, you're also paying the principal. When you pay the principal, you are reducing the amount you owe. So let me kind of illustrate. If you purchase that $500,000 home and put 20% down, for example, and let's assume a 4% interest rate for a 30-year fixed, just kind of like that same house we discussed earlier in the leveraged investment example. So if a $500,000 house with 20% down, so $400,000 mortgage at 4%, that means your principal and interest would be $1,909.66 a month. Every month when you make your mortgage payment, you are retiring your debt every month. In this example, you're making a forced saving deposit of $576.33 a month. In this example, you're making a forced savings deposit of $6,915.96 a year. Martini factor number 4 of 5 financial reasons to buy a home. There may be substantial tax benefits to owning a home and having a mortgage. A unique financial reason to buy a home is if you itemize your taxes, you may be able to deduct the mortgage interest you pay, assuming you are in a 28% tax bracket, and this is just simply for illustrations. I'm assuming you're only in a 28% tax bracket. So again, just illustration only. This would mean the monthly tax benefit for that $500,000 home, which we have been discussing in all these examples, would be $373.33 a month. Now, the annual tax benefit for that $400,000 mortgage, again, we bought a $500,000 house. We put $100,000 down. We have a $400,000 mortgage in our example. at a 4% rate, the annual tax benefit would be, if you were in a 28% tax bracket, $4,479.96. Now, if you rent, there's no tax benefit, nor is there any ability to write off your rent on your federal or your state taxes. However, your landlord most likely will getting the benefit, and I am sure your landlord is very thankful for you participating to their forced saving. Martini factor number 5 of 5 financial reasons to buy a home. Owning a home is typically a hedge against inflation. Let me define inflation. Inflation is a general increase in prices and a fall in purchasing value of money. Housing costs and rents have tended over most period of time to go up higher than the rate of inflation. And for this reason, owning a home is an attractive proposition because it provides a hedge against inflation. Let me recap the Kevin Martini factor talking points. There are financial reasons to buy a home, and the top 5 reasons are: Martini factor talking point 1, housing is one of the only leveraged investments still available today. Martini factor talking point 2, when you rent, you are paying for a mortgage. You're just paying your landlord's mortgage for them. Martini factor talking point 3, owning a home is usually a form of forced savings. Martini factor talking point 4, there may be substantial tax benefits to owning a home and having a mortgage. Martini factor talking point 5, owning a home is typically a hedge against inflation. In closing, getting qualified for the right mortgage and getting a mortgage for your home is not like shopping for the lowest price gasoline for your car. Listen, every mortgage company secures the money from the same source, so everyone at the end of the day has the same mortgage rates. However, not everyone provides trusted advice, and not everyone provides a world-class experience, and not everyone manages your mortgages for you after closing. This is what we do at the Martini Mortgage Group at Benchmark Mortgage. The Martini Mortgage Group at Benchmark Mortgage was founded on relationships because people matter the most to us. The Martini Mortgage Group at Benchmark Mortgage offers trusted advice you can bank on with great mortgage rates while providing on-time real estate closings with a world-class experience. Thank you for tuning in to episode 6, which is all about the 5 financial reasons to buy a home in Raleigh or any city in North Carolina for that matter. Thank you in advance for subscribing and for leaving a 5-star review on iTunes. Our family is your family lender. And always remember, it's not about how big the house is. It's about how happy the home is. Talk to you next week.
Thanks for listening to the Martini Mortgage Podcast with mortgage strategist Kevin Martini. Don't forget to follow us on Instagram at Martini Group and check out our website at martinimortgagegroup.com. Tune in next week for another episode of the Martini Mortgage Podcast.